Welcome to Markets Now. I'm Michelle Ruck along with Kent Beadle with Paradigm Futures. Grains lower this morning. We're seeing lower hogs, but mixed over in the cattle complex. And well, Kent, let's talk about the grains. Kind of an ugly opening this morning. We've continued to see pressure here, and we're removing weather premium, or we continue to be doing that?
Yeah, that's all we're doing. I mean, last week was a week where the hottest temperatures of the season were with us. But with those hot temperatures came some rain showers, as well as extended forecasts that told us that the heat was only going to be with us for that 1 week. And those were summer-like temperatures, but they weren't extraordinarily hot. And much of the belt had some recent enough soil moisture that I think the trade right now believes that the crop probably is going to get through that with maybe some loss, but limited amount of loss, due to the heat that we had last week.
Yeah, although crop ratings could be down this afternoon, you think?
I do. I think we could take a step back. We do have to keep in mind that the trend of corn conditions from this point forward tends to be lower into the end of the year. Now we're starting from a pretty low point. I think it's the fifth worst crop condition rating now in the last 25 or 30 years. So, even if we just treaded water and went sideways from here, that would probably be considered a win. With milder temperatures and maybe some better chances of rain, certainly the northern part of the belt going to be a little drier this week, but sees rain in the 8 to 14 day. We could still maybe improve these conditions at least a little bit between now and the end of the crop growing season.
And in the case of soybeans, weather is kind of trumping some of these new crop export sales that we have gotten, right?
Yeah, and the new crop sales are important because we had almost no program on the books prior to a couple of weeks ago, and now things are starting to tick up a little bit. It was nice to see us make sales 4 out of 5 days last week. Certainly would like to see that to continue. The bears will correctly make note that we're still less than half of where we were a year ago in terms of those new crop export sales in beans, and we need to see that number get better. South America has a lot to sell, and it's going to take a little bit of time before they're out of product and the market shifts back over to us.
Yeah, well, we did have another 4.85 million bushels to China this morning, so hopefully they continue the string here. But as far as, chart levels, we are down into kind of some key support, aren't we?
Yeah, I'm looking at the 1335 to 1350 area for soybeans, testing the 1350 here today. In corn, it's that 480, 485 to $5 area that I think I see as being major support. Keep in mind, if you get underneath that area, you start to get down into that insurance window where there's really little reason for a grower to sell. And with condition ratings where they are, the only person that might be considered a candidate for a sale down in those lower areas is somebody whose yield was going to be above trend. With the protection the revenue insurance product gives a farmer, you're just going to see sales dry up if we get much cheaper.
Yeah, well, that's a good point that you make. Hopefully we get some end user buying at those levels as well. Okay, so let's talk about both corn and wheat, though. We have also taken out war premium here, despite the fact that we have continued to hear of some developments in the Black Sea over the weekend, right?
Yeah, the Russians bombed a grain facility in Kherson, and that's just another in a series of military actions that they've been taking. It doesn't necessarily matter right now. And the reason it doesn't is that Russia has grain for sale. Obviously, the U.S. is on the verge of harvest. It has grain for sale. South America is just post-harvest. It has grain for sale. But as we move through time And we actually do start to get into a situation where, unlike last winter, we were able to move all that grain out of the Ukraine. If this year we can't do it, we're going to see our export sales uptick, and it's going to be it's going to make things a little bit tighter in the world marketplace. So may not matter now, and the traders are more focused on weather, but it's still a very important development long term.
Yeah, and there is some grain moving out of Ukraine right now by land or via land. And so at least the perception is there that there's some grain moving. That's a little negative, right?
Yeah, the rail through whether it's Romania or out through Poland, those export corridors are still available. Of course, what has to happen is that rail cars need to be unloaded, moved across the border, reloaded onto trains in those new locations. Very inefficient way, and certainly a lot more expensive. And it doesn't get you the kind of quantities that the large ocean ships can get you out of the ports of Ukraine.
Yeah, and like you said, we're also removing weather premium here as far as the spring wheat crop. Although we had quite a drop in ratings last week, and probably I'll have another one this week.
Yeah, I think so with the heat. The forecast going forward, again, a little cooler. There does look like we've got some chances for some rain in North Dakota here this week. We did have some rain in the southern Canadian prairies here this weekend, and we see some on the radar this morning. So maybe people feel a little bit better, but at this point in the season, you're getting to the point where if damage has been done, it's been done, and we're not going to recover from it.
And the cattle market, obviously the pullback in corn is helping to support the feeder market this morning, but live cattle futures back lower. And, the lack of cash is kind of part of the problem there from last week, isn't it?
Yeah, it feels like both sides are kind of dug in here right now. I think people who raise cattle know and understand that the situation has been very bullish, and they continue to hold out for higher money. The Packers are looking to, kind of stem some recent losses, and are not willing to pay up for cattle right now. And so we've got a stalemate, and not a whole lot is trading. We don't see evidence yet that the highs are necessarily in. Obviously, the futures market projects higher cash cattle going on in through next spring and into early summer, at least into April. And the tightness is probably going to be with us that long, but it's probably going to be a little bit more of a bumpy ride between now and there, as opposed to the straight up sort of move that we've had here recently.
Yeah, and that market has been so tied to cash. So the fact that it was limited last week and what we did have trade was maybe a little sloppy was part of that, problem. But also, do you think cash trade, what's the expectation for this week? Are we looking ahead at all?
Yeah, I'm going to call it steady at best because of the recent trend.
Okay.
Would have liked to have went with a higher call, but pretty tough to do so with an awful lot of cattle still backed up on the show list.
Gotcha. Hog market is down today. And what are you thinking about that? Do we have the summer highs in finally? Because the seasonal strength, as far as the cash market, lasted longer than any of us anticipated.
Well, that's correct. And it took us higher than we anticipated too.
True.
And, I've called the summer highs in cash about 3 times now. And so smarting from that a little bit, and somewhat reluctant to say that the highs are in, but I think the odds are fairly strong that they are. We continue to hear in the countryside that there's a lot of pigs, there's a shortage of barn space, and we've got a lot of supply coming at us. And I would think that we're going to start to move this cash market lower here real soon.
All right. We'll see if that happens. Thanks so much for joining us, Kent Beadle with Paradigm Futures. That's Markets Now.